Welcome to Dennis Money's 2 cents, your weekly recap of headlines and stories. I'm Matt.
I'm Jake.
And I'm Rabih.
Love it, guys. All right.
You know what I'm impressed by, Robbie, is that you don't come first. I've always just go second whenever we're doing these.
We
Matt
just
goes,
know.
then I go, then you go. We've never talked about that before, but I guess I'm budging it. I don't know. Anyway, we've got it now.
Robbie just always,
Without even talking.
Robbie just sits there, stone faced, like waiting on you, Jake.
I know. Yeah.
And you crack first every time. Okay. Welcome, everyone. This is a special Thanksgiving week 2 cents. You guys didn't know this, that I was going to do this, but we're doing it off the cuff. We need your favorite Thanksgiving food item. Okay. Favorite Thanksgiving food item. And one thing you're grateful for, thankful for, and you can't say family. Jake?
I like that caveat. Yeah, because that's always the cop out. Okay, so let's talk about food first. I am not a huge Thanksgiving food guy, actually. My favorite food would probably be, I know that's kind of controversial. I really like just the dinner rolls, homemade rolls, with either some, like honey butter or jam or anything in those. Again,
I'm not a good choice.
I'm not a huge like turkey or stuffing or anything that type of fan, but I always find the rolls great. And I actually like the day after, the turkey inside the roll. You kind of make that sandwich, that leftover turkey sandwich that you make with the rolls. That's probably my favorite food.
A little cranberry sauce, a little cream cheese or something? Or
sure, yeah. Add all that in there. I think that's fantastic. Something I'm grateful for. I don't know. This is great. I mean, I'm grateful for a lot of things. I was gonna try and say, like, should I make this financially related? Like I was gonna say, I'm grateful that I got. This kind of goes into my point that we're going to talk about later today. But as a funny note, I'd say I'm grateful that I was able to get my mortgage at rates better, 2 years ago than what they are now. Is actually something I'm grateful for. I'm grateful for football. I'm going to watch football all weekend. It's going to be really fun. Yeah.
Heck yeah. All right, Robbie, you want to go next, or should we leave the foodie? Should we leave the foodie for last?
Yeah, maybe leave the foodie.
We'll leave the foodie for last. I don't want to follow. I don't want to follow Robbie. So I'm sort of with you, Jake, in the sense of I actually don't think I think turkey is very difficult to prepare well. Robbie probably has all the science behind it. It seems to be a bit of a drier meat. So I will say that I think turkey's a bit overrated. And I'm always thought like doing some other meat source for Thanksgiving. But I'd say my favorite Thanksgiving food item has got to be like the yams, dude. I love and the full on like yams, like the candied walnuts on top. Like
you get some marshmallows or some things, whatever they put on top. Yeah,
I'm a sucker for that. It's like a dessert, and I love it. I do like all the sides of Thanksgiving for sure.
Yeah, I feel like the sides are better.
Yeah. Okay, one thing. This is something I threw out literally on the whim, so I wasn't prepared for this either. So, but I thought when you say something you're thankful for, everyone says family. Like it's kind of like table stakes. We all know you're thankful for your family.
Yeah.
So I will say I'm thankful for. I'm going to be buttering you guys up, but our team. I really am. Been feeling really thankful for our team lately. The good and the bad that comes from trying to manage a team of wonderful humans. So, but feeling really grateful for the team. Robbie.
Yes. Let me start with the gratitude because you left it on like a very sincere note. I'm to be honest, this is the third or fourth Thanksgiving I ever celebrate. Like Thanksgiving is a new holiday for me. And I'm really grateful to be able to do what I love. And like, when I go to bed, I know that I've done something I really like doing, and I've done it around people who are amazing, and like life is great in the most general sense. So I'm very grateful for that opportunity. It still didn't like wash away. Still don't take it for granted. And when it comes to food, I'm going to redeem all the foodies who listen to this podcast. I'm just going to tell you.
Last time we did this, Robbie, we got in trouble. I got in trouble. We did this for the 4th of July and I got in trouble. Remember, we got an email about my chicken fried steak explanation. So
yeah.
Yeah. This year, my family is scattered all around the place, but it's going to be like a household of 3 people. And still, the smallest turkey I could find in the grocery store was a 15-pound. So on Thursday, I'm cooking a 15-pounder for 3 people. That's how much I love food.
That's awesome.
You can flatten the turkey. You can brine it beforehand, Matt. If you put some cold cuts on top of the skin while it's in the oven, it might not be as dry and burnt as you think it would be. As for all the sides, mashed potatoes, the cranberry sauce, raspberry sauce, that's my favorite.
So you love it all.
I love it all. I do it all from scratch, and I'm grateful I can cook Thanksgiving dinner every year.
Yeah.
It's something I'm grateful for.
That's amazing. And for the record, I said that turkey is a hard thing to prepare. I think it's good. I just think it's a hard meat to prepare. I think chicken's much easier to prepare than turkey. So I'm glad you at least confirmed that for me as the resident foodie here. Okay. Thank you everyone for indulging us. I threw this out of you guys last second. Just thought, hey, we'd be remiss
it's nice
if we didn't mention Thanksgiving. Okay, so agenda for the rest of the way, talking, of course, markets, an economy update from Rabih. We're talking budgeting a little bit with the recent news of the death of Mint, the app, and then talking housing. So Rabih, let's jump to you. Let's talk market.
We'll give you a little bit of tidbits and some data that you can talk about with your family members this weekend.
Yeah,
right?
hopefully, exactly. Giving you a little
the,
something to talk about over Thanksgiving.
Yeah.
That's
Love
right.
it. Okay. Rabih, let's jump to you.
Yes, starting with the market update. If you guys have been checking any investment app or your portfolios lately, you would
I do daily.
notice.
I do daily. I really don't.
You do daily. You've noticed that, that value is going up, and we're very happy to see it go up that quickly. And to give you some context, the low was on October 27th. And since then, the S&P 500 has gone up around 8.4%, which is meaningful when you are talking on a 3-week period. Also, good coincidence, on October 31st, when we had our 2 cents, it was also with Jake. And on that episode, I was saying that the current forward PE ratio on the S&P 500 is around 17.3, which is slightly above the long-term average, to tell you that the market is fairly valued. As of today, after that 8.4% swing to the upside, the forward PE ratio is around 19.4, which is when like the bull market is mature. This is what like in 1920 is like when everything gone up, and it showed that they've done their journey well, getting to the top. So it's kind of now pricey, the stock market. So whoever wants to jump now into stocks, it's not the same value that you would have gotten 3 weeks ago. And part of the reason why, even with the stock market going up, it just became more expensive is because earnings didn't really change much, and the guidance for earning maybe a little bit tipping to the downwards. So given that a stock price is just expectations and actual earnings, it just seems the expectations went up while earnings are still where they are. So while you can still buy into the market, it's not as like the value you're getting out of it isn't the same as it was 3 weeks ago. And there are good reasons for why that is.
Rabih, can I confirm one thing really quick? You're referring specifically to the S&P 500, right? When you talk about that?
Yes,
okay,
because it's the
easiest.
easiest
the one we
to
talk about
on.
the most, but just wanted to clarify that, and we don't have this data, I'm sure, in front of us, but price to earnings ratio in other areas of the market, the global market, are very different. And we wouldn't say every area of the market's overpriced, right? Kind of right. Like this is why we talk all the time about global diversification because of this very reason. Stocks in one area might be pricey at one point, while others are not, right?
Of course not. Small cap value is still on a fair PE ratio that mimics its long-term average. Emerging markets and international markets did not have a higher upswing in their prices compared to the US. So those prices still kind of match the earnings of those asset classes that they follow. But I think the monopoly the S&P 500 has, because it has 100 years of data, and when we say it's following its long-term average, we are pretty sure of that average because we have 100
so
years.
much data behind it. Yeah,
and that's why we just use it to reference the talking point and try to get an indicator of how markets and the economy is moving. And to go back to the story, part of why the S&P 500 did that jump up is because market expectations about interest rates kind of shifted. We know that the Federal Reserve said there's still one more hike until the end of the year. This is what they've been like communicating, and we're gonna stay put, and we're not gonna do anything about interest rates until like there is a meaningful effect to like labor market and inflation. This is the narrative of the Fed. They haven't changed it, but the market changed its opinion. And going back to the Fed funds futures, which what the market thinks the Federal Reserve is gonna do. Given now the higher prices of the S&P 500, it's equivalent to saying that the market expects the Federal Reserve to cut interest rates by 25 basis points in Q2 2024, another 25 basis points in Q3 2024, and then a 50 basis points by Q4 2024. So by the end of 2024, they expect the market at these prices for the S&P 500 expects the interest rates are going to be 1% lower than what they are right now. So not right now, we are in the range of 5.15, 5.25. We're going to drop down to like 4.15, 4.25 interest as a level of interest rates. However, this is what the market thinks. This is what has fueled the rally. They are just changing expectations of what they think interest rates are going to be. Just today, the Federal Reserve published their minutes from the November Federal Reserve Open Market Committee meeting. And just like right before this podcast, Matt saw me. I was reading that 10-page document.
He was.
And and the Federal Reserve did not mention anything at all in 10 pages that there is a possibility to cut interest rates. The only possibility they talked about was slowing down and assessing the next move more cautiously, given that now inflation kind of dropped. So there's this, cognitive dissonance between what the market thinks is going to happen to interest rates and what the Fed's policy is continually communicating. And the Federal Reserve literally said that there's no change in policy given that the labor market is still strong and consumer spending and the consumer balance sheet are still very healthy, which they don't think this grants enough of a reason to drop interest rates. However, the Federal Reserve in their meeting minutes did mention a couple of risks that might be on the horizon. One of them is student loan repayments coming back that might strain consumers more than they think it will. They also mentioned that hedge funds have been taking on debt higher than their historical average of taking on debt. So that's a source of risk. And the third risk, I think, that they mentioned is that given the interest rates, long-term interest rates through that bear steepener that we've been talking about went up, the balance sheets of banks, of like financial institutions, on their assets, the fair value of those kind of dropped down, although they still have good liquidity. So the Federal Reserve kind of understand what risks are on the horizon and what might break in the economy. And if the market is expecting that, by Q2, Q3, and Q4, interest rates are going to start to get slashed, it means that they are betting on one of these scenarios to happen, right? And this is more of like asset prices moved, portfolios did money, good for us. But what does this say in terms of the narrative? What does it say in terms of the positioning? And if now the S&P 500 on its own is indicating that it's taking a bet on one of the risks, do you want to participate in that risk, or would you rather stay globally diversified and hopefully if that risk doesn't pan out, the S&P when it corrects doesn't impact your portfolio as if you were only invested in the S&P 500?
Got it. It's interesting that the student loan repayments is something that they mentioned in that document. When we've talked about this the last little bit, there was I think it was JP Morgan that we referenced. They had a huge study that came out from their research that said from their analysis, it was like an average of $56. I don't have it in front of me, but it was $56 or something like that a month of what they were expecting on average for it to actually impact spending. Much lower than I would have expected. So it's just interesting. And again, that's one study by one group. But it's just, I've actually read a few other things that have talked about that it's not going to be as impactful based on the data, meaning like average balances, average payment, that it's really not going to stop too much. But it's interesting the Fed has kind of mentioned that.
Yeah, that's way lower than I would have thought too, Matt. I'm assuming it's because of the new SAVE plan and these government programs where if you make, people are still continuing their lower payments based on what their incomes were 3 years ago, and there's all these subsidies available. So yeah, that's maybe the reason why I would expect that to go up though over the next couple of years. I don't know. We'll see. Yeah, that's interesting that it's they expect it to be that low.
Yeah, and I think at some point you're right. I mean, so in fact, I was just talking to a client today. Their student loans have turned back on, but they aren't requiring them to recertify income until next year. And so like literally like 12 months, like end of next year even. So because of that, there's going to be a huge delay. So I think even for the next 6 to 12 months, it may not be as big of an impact because, their income in 2019 was much lower than it is now. And so to your point, Jake, maybe it's just a bit of a delay here, and it's going to be, in 12 months from now, all of a sudden it will be a much bigger impact. So, okay. Any other thoughts, Jake? Any thoughts of anything Rabih just hit there?
I did have one thought more on an investor behavior standpoint. Rabih, you said what the low for this year in the market was at October 27th or somewhere around there, right? And we are up, as the time we're recording this, 8%? The S&P's kind of shot up 8% since then, around there. Is that right?
Yeah, it wasn't the low for the year. The low for the year was January because we started from a low point. It went up. We had a really good summer, and then we had a dip in October. And since that October 27 low till today, the market has went up like 8.4%.
Which is, again, like you mentioned, that is a pretty big gain over a couple of weeks, right? It's pretty huge there. This goes back to something we preach all the time, which is market timing, right? Where it's like these things happen, these gains will happen in the market fairly quickly. And if you are maybe nervous about the market going down a couple of weeks ago and you're kind of hesitant to put your money in, or maybe taking your money out of the market, all of a sudden, unbeknownst to like anybody, the market's just kind of killed it for the past couple of weeks. And that's an 8% return, which you really need those in your portfolio if you want to be a successful long-term investor. And that's just, to me, just another kind of testament to how hard it is to time the market and to figure out when these things are going to happen. You blink an eye and you might miss out on an 8% return.
It's such a good point, Jake. And it's funny, we get asked this question quite a bit. Some version of the question is now a good time to invest, right? We get something like that quite a bit. My response to that, as you say that, Jake, is it never feels like it, but it always is.
Yeah.
Right? Like it never feels like a good time to invest. Because if you just take the last 3 weeks as an example, October 27 is what Rabih's saying. It wasn't the low, but it was like it was the end of the dip, right? If you talk to clients or anybody leading up to that point, it felt so scary because we went from, a rally up to it was like up like 19%. I don't know the all exact numbers, but something like up 19% all the way up to the end of July-ish, Rabih, right? And then from end of July, August, September, October was just crap. It was like we were getting like punched in the face every month for 3 straight months. So if you look at that, you say, okay, it's not a good time to invest. It doesn't feel like it because the market just keeps going down. Why would I invest right now? Right. But now it's rallied and now everyone's like, well, it's not a good time. It's going to come back down. So, but if you, again, so you can always find a reason to say it doesn't feel good to invest right now. Always, especially if you watch the news. But the answer is, it is always a good time to invest. Always, especially if you're playing the long-term game. So that's why investing is so freaking hard, because it never feels right, but it always is. Like putting your money in. So I tell people all the time, is now a good time to invest? Easy answer, yes. It just doesn't feel like it. So anyway, we digress. Okay. Moving on. As far as, okay, so next item being budgeting. So this just happened. In fact, when did they announce this? I'm trying to think, like last week, I think, or maybe it was earlier. I just found out about this, but the app, budgeting app Mint, this is probably the most.
That's what I was going to ask. It feels like it's the most popular, the most used budgeting app out there.
I'm going to guess it's the most, it's for sure top 2 or 3 of like the most popular ones out there. They were purchased by Intuit a while back. They made some changes anyway, but they just announced pretty recently that it is now getting shut down. So RIP Mint. It'll be shut down January 1st.
Like the app is going away?
The
like
app is going away. Yeah. So they're shutting down that whole, I guess, division of their business or that part of their business. So it'll no longer be in existence as of January 1. So I was reading through this article, and it kind of brought up this topic of the title of this this article was, "There's a reason why a killer money saving app doesn't exist, or still doesn't exist." And the whole kind of point of this is just budgeting is really, really hard to sell, right? And so it goes through. There's 3 or 4. So it goes through. Okay, so Mint's getting shut down. There was an app called Simple. It was around from 2009 to 2021. Just got shut down. Clarity Money, after selling to Goldman Sachs 3 years later, shut down. There was another app called Fin that JP Morgan had built. They've shut that down. So it was just kind of going through all these different apps. They built some traction, actually sold for quite a bit of money, and then they just kind of putter out. Like this, they just putter out completely. So I guess I'll just leave it there for a moment and just throw it to you guys. Why is budgeting? Well, first of all, what is your take on budgeting, and why do you think this is happening? Basically, simply put, like, why is budgeting so hard? Any thoughts? Jake, I know you've got thoughts. You've got some strong opinions.
I do.
That's why I brought this up when you were coming on.
The first thing I did want to say is, again, Mint is a very popular app. I'm wondering what all these people who are using it for their household budget over the past couple of years are now going to do. They're going to have, I mean, I just feel like that's going to wreck a lot of people's budgets. They're going to have to change there. That's an interesting thing to me. As far as my take on budgeting, I guess we could go on the personal level first. I am not a huge budgeter. I do not sit down every single month and track and put all my spending into different categories and making sure I'm hitting those proper buckets, every single month. I've never been able to really stick to a budget there. I do, however, and this is kind of at Dennis Advisors, what we really believe in is, I don't know if we really believe in what's called like a reverse budgeting technique that you may have heard of before. Warren Buffett's a big proponent of this. So we are big proponents of, you need to track your spending more than just like specific budget. Like, it is important to know what your spending is, how much you need to retire, and all these different things in your financial life really depend on how much you spend every year. And so you really need to know what your spending is, whether you budget or not. You have to know how much you spend every single month. So what I do, this is actually good timing for me. At the end of every year, I actually sit down and I go over my expenses for the past year. I kind of have, my bank just offers an app that I can see all of my spending and things there. I go over what my average spending was every month and actually set some sort of a budget for the next year. So for 2024, I'll be projecting out.
But you're just saying top line budget. Yeah.
Yes. Right. Top line. Like, here's what I spent. Here's what my savings have been, my taxes and, debt payments and things. I kind of project out to see where everything stands. And then what I'll do is I'll just set what we like to call like an aggressive savings rate. So I do believe in saving and investing every single month into various accounts, whether that's a 401k or IRAs or a brokerage account or different things there. Automation is your friend when it comes to managing your personal finances. So I will look at everything at the end of the year. I will set a budget for the next year and say, okay, I want to save this much money every month. I automate that savings, and then I just spend whatever's left over, type of thing. And I kind of just, and those automated savings help keep me in line. So that's what I do personally. I don't know if we wanted to, get into that there, but that's more of how I budget rather than looking back, bracketing out. I can spend $10 on McDonald's this month or $10 on Starbucks, whatever thing. I just say I'm going to save an aggressive amount, what I think is appropriate for my situation. And then I can spend whatever's left over on whatever I feel like it.
Yeah, I love it. I've got so many thoughts on that in a good way. I think that makes so much sense. Rabih, do you have any thoughts on this at all?
I would say I'm in similar boat like Jake, but I like to nerd out about it. So I'm not a budgeter, but I'm definitely an.
Doesn't sound like you, Rabih. Doesn't sound like you at all.
So I'm not a budgeter, but I'm definitely a tracker, and I have like this, 5-6 sheet spreadsheet that I'm very proud of. And every single month I actually put there my expenses, and I look at them in pretty graphs and enjoy the art of that Excel can produce. So for me, it's more of tracking where my expenses are going and making sure that my savings are going to the right place. And I think this opens up the bigger conversation about like why budgeting is hard, because it's something behavioral and you need something to make you want to do it. For me, my fix is that I want to see them in graphs, and this is what I enjoy. You can judge as much as you want. But I think for other people, budgeting has to have this action reward loop from a behavioral perspective that maybe Mint did not provide. And I don't know what provides it. It's very personal.
Yeah. Well, it's funny you said that, Rabih. There's a quote here at the end. They're talking to one of the users or former users. And it says, it's not the dope. So they're talking about why it's so hard, right, for these apps to survive. This is the former founder. That would make sense. Former founder of Mint says, it's not the dopamine hit of Instagram and YouTube. It's adult stuff. It's responsibility. Like that kind of sums it up. Like it's just not sexy. It's not fun. It's not something people get jacked up unless you're Rabih to like track your stuff, right? So I think there's a place. Jake, I'm with you. I do agree as far as like long term. For you're talking like, I always liken this weird to like fitness and nutrition. That if you tell like 99% of people are not going to follow a strict diet their whole life. It's just it's unreasonable to ask for that. To try there now, there are fitness nerds out there that, and I mean that endearingly. By the way, I vibe with those people. But there are people out there that are like Rabih when it comes to investing, that are like, they're so into it. They love it so much just for the sake of doing it. And they love it. They love tracking their macros, their micros, their vitamins, that like they love it. But for most
the average
people,
person isn't going to weigh their food.
Exactly. The average person is not going to weigh their food. And so I look at budgeting as the same way. And so why I bring that up is to say, I think budgeting can have a place. So I'm thinking of clients that I've had where spending was a legitimate problem.
Yeah.
Right. Like it's like you've done everything you can as far as the practice, you're maxing that out. Your income's really solid. But you truly have a spending problem. In those situations, I think a budget, just like a diet, can help you kind of reset your lifestyle. So I do think there's a place. I agree with you, Jake. It is not a long-term solution here. We are far more interested in saying, how do we systematize this to something that is sustainable? And what you highlighted, I think, is perfect. You need to be tracking this thing, tracking your spending at least once a year. We'd ideally want people to do it more than that, probably at least twice a year. You know, if you're doing this at home with your spouse or partner, I think ideally is you're sitting down once a month for 5 minutes, 10 minutes, and just checking in on your spending. I think people get so intimidated by that idea because they think, to your point, Jake, they've got to be looking at their Starbucks categories. Like, no, don't even look at categories. Just look and see what you spent, period. End of story. Just look at the top line. And that's far, far different than tracking every single little penny where it went. I think that just becomes intimidating for people. So
you have to know, spending. I think that's also another reason why these apps may not sell, is because budgeting requires you to know what you're doing and to know what you're spending on, which that act alone can be intimidating to like admit, like, wow, I'm spending way more money than I thought I was.
Which, by the way, you are. By the way, you are. Like,
yeah. Which,
you're spending more than you think you are.
It's hilarious. We have people. So how are people call, a lot of dentists call in, and we'll do consultations with them. We ask them to tell us a bit about their financial situation. One of the things that we ask for is, what is your monthly spending? And they'll write down a number. If those people then come on board with us, we actually dive in and track what their spending is. Like 100 times out of 100, it's always what people say it is always 10 to 20% less than what they actually spent. Like, it's a consistent thing, or more over time. Right. Yep. And so, I think that can be uncomfortable, but you have to do it. So like for me in my situation, going back to that, every single month I actually do like look at, hey, this is what I spent last month. I don't get into details or transactions, but I would say, oh, here's my spending. Maybe it was high, maybe it was low. Again, it's hard for me to get too concerned about it because of that aggressive savings rate that we like to set, right? It's like, as long as that is in track, I'm not getting into credit card debt. My spending, I want to make sure it stays within appropriate ranges, but I don't feel the need to track every single transaction.
Yeah, because here's what you're doing if you really think about it, right, Jake, is when people talk about budgeting, they get nervous and intimidated because it's all these different categories, 15, 20, 25, 30, who knows how many categories. Well, when we say flip it, you worry about one category, literally one, which is your saving category. You take care of that and forget the rest. You take care of your savings category. That's the only one you have to really worry about, and then spend freely on everything else. And it's amazing when you actually implement this. It's such a simple concept, but how freeing it is for people. And people are like, oh man, I don't even have to think about it. As long as I put my savings away on an automatic basis. It's pretty powerful. So,
Yeah.
okay. Well, I'm glad we talked about that because I knew you had some strong thoughts, and hopefully that's a helpful thing to discuss. Do we want to jump in? We're about 30 minutes in. Do we want to jump into the housing? Should we kick the can?
Please.
We could do it really briefly again. I don't have a big take.
Rabih,
or
did
hot
you say
take on this.
please? Like, please, let's kick it.
No, it's like this is the teaser for next week.
Oh yeah,
But-
Oh, it can be. I'm fine. If we want to tease it, I'm fine teasing. It doesn't matter to me.
Let's see what we got. I'm just gonna double check and see. Okay, Jake, the 28th, we're gonna put you on next week. We're gonna start off with housing.
We're gonna
tease.
talk about what we really like this Thanksgiving.
Ooh, there you go.
Make it a
Yes,
full
we're gonna
circle.
circle back on post Thanksgiving. Okay,
We'll report,
we're gonna be
yeah.
pretty sleepy probably. All right,
Yeah,
let's
but
do
that's
that.
a teaser for next week. We're just teasing people to tune in.
We're teasing people to tune in. This is what we do. We are masters at this marketing and leaving people on a cliffhanger. They're dying to know what we're going to talk about with housing. We know this. They're going to be clamoring. They probably won't even be able to enjoy Thanksgiving now because they're just so looking forward to what we're going to talk about with housing. So sorry guys, we're going to leave it there. Thank you guys so much. Thank you, Rabih and Jake. Thank you for listening. If you're listening live or maybe post Thanksgiving, this will come out Friday. So maybe if you're listening after Thanksgiving, if you are, we hope you had a wonderful time with your family. We will be back next week to talk housing, economy, and who knows what else. So that was our 2 cents. Until next time. Bye-bye.